What's up, folks? This is Crypto with James talking to you today about the FOMC minutes release, as well as some very bullish news in terms of a surprise big investor in the crypto space. The markets have reacted to the FOMC meeting, or the minutes rather. So we'll take a look at what's happened in the overall space and what the actual minutes said. But the bigger news about one of the biggest investors in the space. Before I get into that, I update the spreadsheet. These are the first 26 coins I spoke about on the channel. Had you invested $100 into each of these when I release videos about them and you cashed out in the bull cycle, you'd have been in profit for 123k. If, however, you were still holding all that crypto, you'd be in profit for 12k. Difference between a bull cycle and a bear cycle. Anyway, if you want to see the coins I'm buying up in the bear cycle, the ones I think are going to have the massive gains, because make no mistake about it, whether it is the S&P 500, the NASDAQ, or crypto, the biggest gains are made from bear to bull. The difference is with crypto, the results are tenfold what you'll get everywhere else, or even more than that. So if you want to see the coins I'm buying up, go to copymycrypto.com. You can check it out. The link's in the description. It's where I share every coin I buy and sell. If you guys don't have time to do research, you can see what I'm saying about the coins that I'm getting in on. Everything on the site is verifiable as well, because it's all on the YouTube channel. So if it resonates with you, come join me. If it doesn't, don't. No biggie. Still watch the channel though, because I need you guys. Without you, there is no channel. But yeah, check it out. Link's in the description. So, Bitcoin is currently on about 2.1% downturn, and I'll probably get this video out tomorrow, to be fair. Let's have a look at the S&P 500. S&P 500. Why have I done that? You know when you're tired, guys? You know when you're tired? There we go. Matter which one I go with. There we go. So S&P is currently taking a 0.7% hit. S&P represents $40 trillion, so 0.7% of that is about 28 billion. Yeah, about 28 billion down on the market today. If I've got those numbers right. That's off the top of my head, so I might be a little off. Yeah, markets have generally they've not had a huge decline, to be fair. Yeah, not a huge decline whatsoever, not compared to what one would have expected. Wrong fucking one. Yeah, so, yeah, Nasdaq, there we go. Nasdaq minus 1.21%. So yeah, I mean, that's a bit bigger, but these haven't been the biggest of drops or anything. And it's taken a really long time to establish sort of where the momentum was going to go. So let's just take a look at the overall results. So the minutes came out, and they said they're planning to continue raising interest rates into so-called restrictive territory to cool inflation and anchor consumers' inflation expectations. Central bankers are obviously still alarmed over the insanely high inflation rate. By the way, in the UK, and that broke 10% today. That was, and it's 12% across foods. And even with, and the central banks remain alarmed about the high inflation and the very tight labour markets. They anticipate having to raise the target range for the short-term interest rates beyond the neutral rate and towards a restrictive policy stance. July's 0.75% rate hike brought the federal funds rate to a range of 2.25 to 2.5%. Members of the FOMC also said they plan to double the pace of balance sheet shrinkage. So, run through this before. 60 billion in treasuries, 35 billion in mortgage-backed securities. Fed members also suggested that the pace of rate hikes and balance sheet shrinkage would be data dependent, and that it would become appropriate at some point to slow the pace of tightening to assess the impact of policy changes on bringing down inflation. which is effectively them going, we'll give ourselves a pause. Because they've got to do that, because with continued changes month on month on month on month on month, it's hard to see where, if they could have stopped previously. So they're giving themselves that sort of opportunity to take a break, to identify, look, is the approach working? Is it aggressive enough, or is it overly aggressive? Which is legitimately some of the concerns of FOMC members. So some participants have indicated that once the policy rate had reached a sufficiently restrictive level, it would be appropriate to maintain that level for some time to ensure that inflation was firmly on a path back to 2%. Markets steep losses after the minutes were released, reflecting a perception that the Fed wasn't staking out a more hawkish stance than originally interpreted after the meeting. So Bob Miller, who is head of America's sort of fundamental fixed income at BlackRock, said, our reading of the July FOMC meeting and the minutes released today is that the intended message from the Fed was not dovish per se, despite the bond and risk asset rallies that followed the meeting date. We believe the intended message was to signal wider aperture in the committee's reaction function, which is setting the stage to eventually allow time to work for them in pursuit of their policy objectives, which again is effectively them going, it gives us a chance to take a break and actually see what the impact has been on the overall approach that we've taken for X amount of months. And that might mean that they give themselves 2 months break from any major hikes or major reductions in balance. So looking ahead to the meeting, it's unclear whether there's going to be a 0.75% rate hike again. Members concurred that the rapid move from near zero rates earlier this year to what they considered a neutral stance had helped them bolster the FOMC's credibility with regard to bringing inflation back to the 2% target, and contributed to a broader tightening of financial conditions. And while they expect to raise rates into restrictive territory in the near term, the minutes said that many participants remarked that in view of the constantly changing nature of the economic environment and the existence of long and variable lags in monetary policy's effects on the economy, there was also a risk that the committee could tighten the stance of policy by more than necessary to restore price stability. And this is something Jerome Powell has spoken of a few times, and he said the number one actual target beyond, obviously he's spoken about inflation a number of times, but price stability has been his number one target. And part and parcel of doing that is obviously minimizing inflation, but they've got to restore price stability. And an overly aggressive stance on price stability is not ideal either. So they want to get this sort of month or 2 month pause in, because there is a data lag between monetary policy implementation and economic output. So they have to get they have to take a break at some point to identify the impact on a month-on-month period. And it wouldn't be surprised if they go, September they do a hike, October they do a hike, and then they go, after this hike, we are going to take a break for 2 months and look at the data and see, is the approach working? Is it aggressive enough, or has it been overly aggressive and we need to loosen the financial restraints that was or the financial tightenings that we've been putting upon, the economy. It's a very interesting one. So Jeffrey Roach, who's the chief economist for LPL Financial, said markets will likely expect the pace of tightening will slow in the upcoming FOMC meetings, and the FOMC meeting will likely increase rates by 0.5% at the September meeting, barring any surprises in the upcoming economic data. And that's the only thing, is we'll see what happens. But fundamentally, in the UK, in the Bank of England have done 0.25% every month this year, except last month where it did a 0.5. And we have inflation way worse in the UK than in America. Overall, 10.2%, I believe, it came out today, with over 12% on just food, which is significantly worse than America. And arguably, that's because the Bank of England have been not aggressive enough in terms of the interest hikes. They've not battled inflation aggressively enough, and we have resulted in a far greater run of inflation, where we've got a lot of people that are choosing between heating and eating, and that's actually become a massive phrase in the UK. Heating or eating, I have to make a choice. And it's a sad situation, but maybe that's because our central bank, not that I'm a fan of them, obviously, or any, but maybe it's that ours was not aggressive enough. So we'll see. But overly, like right now, certainly the markets have not reacted in the most positive of ways. And to be fair, even if we take a 30-minute look on the time frame, where are we at now? It's about 19. So yeah, so actually the Nasdaq jumped 0.65 on the data release, on the minutes release. The S&P 500 jumped by about 0.44% in a half-hour space of time from the minutes release. Let's have a look at Bitcoin. Let's use Bitstamp. Bitcoin. That 30-minute candle straight after. 0.17%. But bear in mind, at the time, it did range from lows. Yeah, there's not much difference in it, is there? It's about 1% move from the low to the top. So yeah, so Bitcoin really didn't move tons, and then actually had 3 more candles of decline. It's rallied a little bit on the most recent half hour. So we'll see how the day closes, mind you. But on the more interesting news, Google have invested $1.5 billion in crypto companies throughout the past year. So Google's parent company, Alphabet, invested more than any other public firm in blockchain and crypto companies between September 2021 and June of 2022, $1.5 billion, focusing on just 4 blockchain companies: Fireblocks, Dapper Labs, Voltage, and Digital Currency Group. Other major investors included financial firms BlackRock and Morgan Stanley, who invested more than $2 billion combined, and Samsung, who invested nearly $1 billion across 13 companies. So it's a big deal. Look, it's not just VCs that are pouring money into crypto. It is these public suspects that are betting billions too. So worth noting that these blockchain companies like Fireblocks, like Dapper Labs, like Voltage, and like Digital Currency Group are worth looking at, because they have had heavy investment from the parent company of Google. You've got BlackRock that have heavily invested in both Circle. Well, we knew about Circle, obviously, because of USDC. But heavily in FTX and also Anchorage Digital. Samsung that have had a decent range, to be fair, in different cryptos. Goldman Sachs, Certic, they went in heavy on Certic. Coinmetrics as well. So worth paying attention to, guys, because these massive companies as well, they don't just chuck money in willy-nilly. So they're paying attention to stuff. And $1.5 billion into those companies is worth noting, because Google tend to win at what they do. And $1.5 billion, that's just in the last 9 months. So what's going to happen in the next 9 months? It's a really interesting situation to be in. So what do you guys think? Are you going to take a look at the 4 companies that Google have invested in? Although I will take a deeper look into each of them over the coming weeks. But are you interested in taking a look in them? How are you feeling about the overall state of the US economy? How are you feeling about the overall state of the financial markets right now? Are you feeling good about them? Are you feeling negative? Are you feeling fearful? Let me know in the comments down below. Let me know what you're thinking. And also, if you're in the UK, let me know how you're feeling. Saw our inflation data today. Saw a lot of the news stories about people struggling. How are you feeling? You're looking at it going, this is bullshit. How are our governments so useless? I mean, half of them are on fucking holiday at the moment anyway, including the Prime Minister. So tell me what you're feeling in the comments down below. Like the video, subscribe to the channel, hit that bell notification so you know when new content is coming out. And if you want to see the coins I'm buying in this bear cycle, the coins that I think are going to have the massive runs, come check out Copy My Cryptos, where I share every coin I'm buying, every coin I'm selling. Go to the site, read through the site, everything on there you can check on the YouTube channel. It's all verifiable. If you like it, if it resonates with you, come join me. If it doesn't, then keep watching the channel, guys, because fundamentally, I said it before, I'll say it again, without you guys, there's no damn channel. So thank you for the support and take it easy. Bye-bye.